Welcome to your daily market briefing. Here are the key headlines shaping today's markets. 1. Trump signals Navy escort. Iran diplomatic outreach emerges. 2. China, NPC, sets 4.5 to 5% growth target. Rebalancing takes priority. 3. Korea, KOSPI rebounds 12% after historic crash. Sentiment whipsaws. After the headlines, you'll find a global market snapshot and a forward calendar of what to watch. Before we turn to today's stories, a short introduction. Daily market briefing. Think ahead, every market day. Subscribe to stay focused on what matters. Please keep in mind that all content in this video is for educational purposes only. It provides market context, not financial advice. 1. Trump signals Navy escort, Iran diplomatic outreach emerges. Primary asset classes impacted: energy, Brent WTI refined products, European gas, global equities, S&P 500, Euro Stoxx 50, Nikkei 225, KOSPI, safe havens, USTS, gold, JPY, FX, DXY, EMFX, shipping and airlines. What happened? President Trump pledged U.S. Navy escorts and insurance for tankers transiting Hormuz, while reports of secret Iranian outreach to U.S. intelligence hinted at possible talks. Brent held above $80 as equities recovered part of earlier losses. A separate tanker explosion near Kuwait underscored that the conflict risk now extends beyond a single choke point. Why it matters. Escorts and insurance partly contain supply risk premia, but the Kuwait incident shows maritime risk is widening, not disappearing. Markets are toggling between a managed disruption regime and a broader regional conflict that could reprice inflation, curves, and EM funding costs. Central banks must weigh energy-driven inflation against downside growth risks as they calibrate the pace and timing of future rate cuts. Key numbers to remember. Roughly 20% of global crude exports pass via Hormuz each day. Brent remains above $80 per barrel as conflict risk persists. U.S. equity benchmarks reversed intraday losses of around 1% after the escort pledge. What to watch next? Evidence that escorts are operational and effective, plus any formal Iranian response, will determine whether oil stabilizes or reprices sharply higher again. Shipping insurance costs, tanker routing decisions, and additional attacks near Kuwait or other Gulf routes are key stress indicators. A contained security regime would support risk assets and steeper curves. Renewed disruption would tighten financial conditions and pressure EMFX. 2. China, NPC sets 4.5 to 5% growth target. Rebalancing takes priority. Primary asset classes impacted: China equities, CSI 300, Hang Seng, A-shares, tech and consumer sectors. Asia, FX, CNH, KRW, regional crosses. Industrial commodities, copper, iron ore. EM, Asia credit. What happened? China's National People's Congress set a 2026 growth target in a 4.5 to 5% range, below last year's goal, and emphasized domestic demand, high-tech upgrading, and overcapacity reduction instead of large-scale infrastructure stimulus. Equities in onshore and Hong Kong markets rose, with tech and consumer names outperforming traditional heavy industry and property stocks as investors repositioned around the new policy mix. Why it matters. The lower but still ambitious target signals tolerance for slower headline growth in exchange for better quality and lower leverage, tempering expectations for commodity-intensive stimulus. That favors China and North Asia tech and consumer names over global miners and machinery exporters. For macro, it points to a more modest China impulse for global demand, keeping some lid on medium-term inflation but limiting upside for cyclical sectors tied to construction. Key numbers to remember. Growth target lowered to a 4.5 to 5% band from about 5% previously. Fiscal stance still supportive, with deficit near 4% of GDP. China and Hong Kong equity benchmarks gained roughly 1 to 1.5% on the announcement day. What to watch next? Details on consumption vouchers, social safety net expansion, and tax relief will show how serious Beijing is about rebalancing toward households. Implementation of capacity cut plans in steel, autos, and green tech will shape global price dynamics. Market focus stays on whether credit growth and local government financing align with the rhetoric. Underdelivery could weaken CNH and weigh on China risk assets relative to regional peers. 3. Korea KOSPI rebounds 12% after historic crash, sentiment whipsaws. Primary asset classes impacted: Korea equities, KOSPI, large-cap semiconductors, financials; broader Asia equities, Nikkei 225, MSCI Asia, KRW, and regional FX, Korea sovereign spreads. What happened? After its worst session since the global financial crisis, with a drawdown above 10%, Korea's KOSPI bounced roughly 12% as energy fears eased and short covering accelerated in large-cap semiconductors. Policy reassurance and signs of de-escalation in the Gulf helped calm panic selling, while margin calls and forced unwinds remained a drag for more leveraged pockets of the domestic market. Why it matters. The violent two-day swing highlights Korea's dual exposure to imported energy and global chip cycles, making it a high beta proxy for both geopolitical and tech risk. While the rebound eases systemic stress, it also reveals fragile positioning and elevated leverage among local investors. A renewed oil spike or negative headlines from the Middle East could quickly retighten financial conditions and reignite outflows from EM Asia. Key numbers to remember. KOSPI's rebound of about 12% followed a prior one-day drop above 10%. Semiconductors added well over 10% on the recovery session alone. KRW traded near a 1,500 per USD handle during the stress episode. What to watch next? Foreign flow data, margin debt trends, and implied volatility in KOSPI options will show whether stability is returning or just temporarily restored. Any Korean policy backstop, such as liquidity facilities or targeted support for key institutions, could moderate volatility. Conversely, further Middle East supply shocks or a sharp tech sector correction would likely hit KOSPI first, making it a useful early signal for broader EM Asia risk sentiment. This global market snapshot is designed for quick reference. You may pause the video to examine the data more closely. This forward calendar section is designed for quick reference. You may pause the video to examine the data more closely. Thank you for watching today's briefing. In markets, understanding the field matters as much as making the move. And that's the perspective we aim to provide. Subscribe to Daily Market Briefing and turn on notifications to stay focused on what matters every market day.